It's Labor Day, guys, and Bitcoin is putting in some bullish activity as we proceed throughout the day. So the question on everybody's mind is this actual genuine movement, or with funding rates still negative across the board, is this a late short squeeze? We're going to break that all down in today's video, as well as talk about fundamental strategies, mentalities to approach trading with that are significantly going to help your trading ability out. A lot of things that people don't talk about, that people don't cover, the non-sexy aspect of trading that really generates far more profit in your pocketbook at the end of the month, at the end of the trading year. We're going to break that all down in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live for you in the studio. It is September 2nd, 2019, Labor Day, but it's still 2019, so it is a foul year of our Lord, your daily source for market updates, sentiment, and news for traders and investors. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in that live chat over there. And also hit the thumbs up button. We highly appreciate it. Today's episode of Breaking Bitcoin is brought to you by us. If you are a new, aspiring, or experienced trader, make sure to head over to premium.crackingcryptocurrency.com. It is the top link in the description down below to see all that the premium group can do for you. In addition to exclusive trade setups and signals, as well as proprietary indicators, tools, spreadsheets, and tips and tricks, we also provide our proprietary Pathways to Profit course, which teaches you how to build your own technical strategy from the ground up using verifiable, objective data. We also educate individuals on how to approach trading psychologically, how to construct a lifestyle around profitable trading, and also how to view the game in a realm of statistical probability and not gambling and random unfalsifiable analysis that you will typically get with most other traders. Guys, premium.crackingcryptocurrency.com. Link in the description. So we've got a fantastic show for you today. I don't even know where to start. Literally don't even know where to start. I do know where to start. We're going to start off the way that we always do because structure is important. We're going to start off by giving away some crypto. We've got a little bit of X42 left to get away. So I want to thank last month's and currently right now, current crypto comment giveaway sponsor, X42 Protocol. Make sure to go check them out at x42.tech. All right, we made it back to the green screen scene, guys. Hopefully you guys are doing absolutely fantastic in the chat. Let me know how you guys are doing. What's going on? Ken D, Roy Coin. Let's see what else we got in here. I saw so many of the good guys in here. All right, scrolling up a bit. Andrew Munns, Crypto Beginner, Scott, Mastache, Starman Jack, Bob the Builder, Crypto Beginner, Mr. Hut QC. What's going on, my guys? And shout out to you, Mr. Hut, for being the first in and the last out. I also want to thank all the new subscribers and followers to the channel, so thank you very much. Sean Rudling, John Shamus, Cody Tynan, and Mark Swanson. Thanks for joining the community over there on YouTube. Very pleased to meet you guys. That's all right for the L. So we've got the random YouTube comment picker pulled up here. We're just going to load these comments, and we've got 10 potential winners. We're just going to... And the winner is BobbyG. He says, or she asks, what minute mark is the taxes part on? Seems I missed it. I did put the timestamps in the description of the video, so you should be easily able to go and track down those timestamps. BobbyG, get a hold of me in the Discord at JustinWise5696, and I will tip you some crypto. Congratulations, good sir or madam, however you happen to be. All right, let's slide right on over into the charts. And we've got a lot to talk about today. You know, we're not going to spend too much time on Bitcoin's price because I do want to get to the main points of the show. I want to talk about the Lightning Network. I want to talk about Bitcoin as a protocol layer. I want to talk about Bitcoin as a payment solution and as a payment network and what that really means. Because I think that a lot of people, and this is great, we had a very long conversation this morning when we did kind of our Monday morning staff meeting, and we the conversation really went into, what is Bitcoin's purpose? What is the Lightning Network's purpose? And the problem that a lot of people conflate the Lightning Network and Bitcoin, which although, yes, Lightning Network is a layer 2 protocol on top of Bitcoin, it is not Bitcoin. And so people conflate Lightning Network and Bitcoin, and the purpose of the Lightning Network and the use case of the Lightning Network and the use case and purpose of Bitcoin. And I think that is a problem. And I think that comes from individuals really not being well versed in the tech or the technology or the development aspect of Bitcoin. They just kind of look at the overall thing and read what they hear and blah, 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 blah. But again, we're going to break down that and give some opinions on that. But I also really want to focus today on trading strategy, trading psychology, and things to help boost your trading. But of course, we cannot ignore Bitcoin's price. So we'll make this really simple. And again, continuing on in the vein of introducing more classical technical analysis to our lay of the land, to our understanding of Bitcoin's price here, we will keep that congruent. Let me know if you guys have any questions about how we're looking at the chart. So anyways, give you guys an update on where I am. Still in my short position. We're nowhere near my average entry. I took profit down there at the lows, as well as the rest of the group did. About half of my position. Moved my stop loss to break even. My stop loss is at break even, and there's no reason for me to exit the trade. Even on yesterday's close, and I typically don't like to look at data that comes in over the weekend. I also really don't like to look at data that comes in over holidays, but that doesn't mean that it's not important. Now, if I were to point out a fundamental aspect, it's that the funding rates are still negative across most of the exchanges, which makes this, in my opinion, more likely to be a short squeeze. And we also don't have the good setup for the long trade at the current moment in time. As we talk right now, price is creeping on the daily time frame above the daily baseline, giving us an opportunity to take a look at that and potentially consider that as an exit opportunity. We can see Minx. Let's just start at the beginning. So let's start with Minx. We do see Minx crossing above the noise line as we have right here. And since this is not occurring on a weekend, this is occurring on a holiday. So week one could be akin to ignore this. But I would assume that if we do cross and close up here and we continue to get some bullish expansion, I don't really need to worry about anything because my stop loss will be triggered at break even on my short position. So I will incur no loss on that trade. And I can be safely able to kind of plan my next move out here. So we'll get into the reversal aspect, the reversal baseline bounce setup that we actually have on the table right now here in just a second. But let's go through the rest of our indicators too as well here on the daily. So we have Wadatar Explosion. Wadatar Explosion is color flipping. Now, yesterday we did close below the deadline filter. We did close above the explosion level, but we did close below the dead zone filter. And typically, one way to trade Wadatar Explosion is if we close below the dead zone filter or below the explosion level, you exit the trade because the momentum has shifted and you don't want to get caught in the ranging aspect. Because when Wadatar Explosion is printing columns that are below the dead zone, and especially below the explosion level, although that's slightly different, but below the dead zone filter, what that's letting you know is that there's not a lot of momentum in the trend, and you're likely to experience a lot of chop on this time frame that you're viewing, right? So you have to understand that within chop, there can be like 4 or 5 candles in one direction, and there's 4 or 5 candles in another direction, and 4 or 5 candles. But when we're looking for a daily trend, we're looking for a nice, strong trend. And I kind of am getting inundated with DMs at this point in time, and I had a lot of messages when I was waking up. And here's the thing, man. I want to point this out very clearly. This is not just because the candles are going up does not make this a bullish structure that there's a very good long trade setup. And again, what's funny about this is that people are like, oh, absolutely, man, this is like absolutely the second time or the third time or the fourth time or whatever that we're going to bounce from 9,000 and just skyrocket on up. But that's not actually true, because the reality of the situation is that every time we have tested this level of support that I did mark out down here, we made a subsequently lower high and a lower high and a lower high. And so I think a lot of people are ignoring the overall bearish structure of what we're looking at right now. And I think a lot of people are just looking for any and all opportunities to take along. And as an investor, as somebody who holds Bitcoin, I never like to see price go down. But as a trader, I'm also not. You can't just go with the crowd. You can't just go with what everybody's saying. People see divergence in every shadow, and people see chart patterns in every shadow, and it's just not the case. It's just not the case. There are good, reliable setups that should be congruent with the way that you trade. And then there's not. And if you're not trading inside of your pocket, then you're gambling. And I don't gamble. So anyways, but yes, I will not deny the fact that we did bounce off of that order block. We did talk about that earlier. We talked about price bouncing up to 9,800, 9,600 to 9,800. We've actually surpassed that a little bit, currently sitting at 9,999. That is a limit break in Final Fantasy VIII. I would, oh, back down to 9995. We must be up against Omega Weapon. So anyways, getting that nice bounce. Anyways, from the $9,000 region, we had plotted out that level of support between 9,300 and 9,470. So that is where we got a little bit of a bounce. Where are we at right now? We bounced back above, we bounced, okay, I got to make sure because I don't. Yeah, okay, so we bounced back above our 100 exponential moving average. We did on today's intraday, so intraday today, we did cross and close above the 8, and we are currently flirting with the daily baseline, the daily 13 exponential moving average. Now, if we cross and close above this level, you exit the position. Minx is also telling you to do that as well. Wadatar Explosion is also telling you to do that as well. And Time Transformation is telling you to do that as well. So that's just the logical thing of what one would do. Now, but I want to point out the other setup. So the other setup is, exiting roughly near your break even, having taken the very profitable trade, good to go, kind of resetting and looking for the next opportunity, basically waiting for price to cross back down and close below the baseline again. Should we cross and close above it? But the other setup is the reversal baseline bounce. Again, we talked about this on Friday. We talked about this on Thursday. We talked about this on Wednesday. We talked about the bounce to 96 to 9,800. So now that we're there, it's going to be very easy for people to abandon the original plan. It's going to be very easy for people to abandon the original plan. And again, I'm not telling you guys what to do. I'm telling you what plan we had talked about on, all of last week, creating potentialities for different things to do should the market do this. And that is the basis of any good trading plan. And we'll get into that when we talk about unfalsifiable data and trading language and why most technical analysis is wrong. But anyways, the plan, we're at the daily baseline. We are bouncing off the daily baseline with a bearish market structure with all of our indicators overall in the red, telling us that the trend is to the downside. We can understand when we delve into the realm of subjectivity a little bit. Let's just zoom out a little bit. Let's just get rid of CCEMA and just look at this. Lower highs, lower highs, lower highs, lower highs. Price squeezing up, price squeezing up, price squeezing up. Haven't broken above any major level of resistance. We have literally not a whole lot of attractive volume. And in fact, to confirm that, I do want to actually go over and look at Bitcoin trading volume. So let's give data.bitcoin.org a little bit of a refresh and see if I'm wrong. Okay, so we want, and we've got, let's see if we can't get the last 7 days. Yeah, so there we go. So overall, is there a whole lot of impressive volume going on right now? No, there's not. There's nothing overly impressive about this volume. And again, volume matters because volume is going to let you know where the majority of buying and selling is taking place and in what direction it's likely to take place. You have volume coming to the market in two places, at the beginning of a trend and at the end of a trend. Okay, so let's go back to, and again, we want to be careful about using this volume on the bottom of the chart because it's not reflective of the volume across the entirety of the Bitcoin markets, which is why we would use something like Bitcoin trading volume to aggregate volume across all the markets. So let's go back to the chart. And let's look at, what days did we bottom on? The 29th, 30th, and the 31st. Okay, so let's go back to the volume chart. The 29th, right? The 30th and the 31st. Is there any impressive volume down there? Is there any trend ending volume that would indicate that individuals stepped in and en masse and bought the dip? There's not. So what is this likely? It's likely a short squeeze. It's likely an opportunity to push people out. Now, it could not be a short squeeze. It's obviously there are genuine buyers in here. And I don't want to, delve the realm into speculation of all market manipulation. But again, it's not a very impressive bullish movement to me. Something that I'm willing to be proven wrong on. And again, in the realm of non-falsifiable language, what would be proven wrong to me? Well, crossing and closing above the daily baseline would not most likely, I want to use very clear terms here, would be the indication to exit. Now, exit indicator did fire down here. Time transformation did fire on the 1st of September on yesterday's daily close as we crossed and closed back above the 100 exponential moving average. The 100 exponential moving average doesn't really mean anything. It's just a pit stop. It's just a road. It's just a line on the chart for an individual to be able to target to look around. You guys are very well aware of the lines that do mean a whole lot to us. That is going to be the 13, the 55, and the 21. Now, I do have to point this out. We are operating in an overall we are operating in a daily bearish structure, more bearish than normal. Why? Because we have had the 1355 bearish cross under, right? And we've talked about that at length before. Al Pascal. I probably didn't say that right at all, but thank you so much for the follow on Twitch, my friend. And when we get those exponential moving average cross unders, Oreo Nutella, thanks for following over there on Twitch as well. So that one was a little bit more easier to pronounce. When we talk about these bearish and bullish cross unders, we've talked about this before, and we've pointed out, at least I have, how significantly market structure changes when you get those, moving average crossovers. So when the 13 daily crosses over the daily 55, you enter into a far more bullish atmosphere, and you can really, that's something that is easily back testable. It's something that's easily verifiable. And what that lets you know is that you can be a little bit more aggressive with your long positions, and you want to be a little bit more conservative with your short positions, because you're overall operating in a daily bullish trend. We're not anymore. We're operating in a daily bearish trend. As the bands have tightened, as the 13 moved closer and closer and closer to the 55, we came down and tested it, thought we were going to get the cross under right here. That did not happen. We had one kind of more very far stretch away from the mean, because of course our baseline is kind of representing the mean price, and we're looking for a trend when it's broken to one direction or the other. But that when we're talking about reversal trades, the reason why we're always looking at the baseline, or we're looking at projections of ATR off of the baseline, is because that is reversion to the mean strategy. Yeah, that is reversion to the mean strategy. Hale End, thanks for following over there on Twitch as well, guys. Awesome. Getting some good Twitch love today. Highly appreciate it, man. Not a whole lot of people deigning to stream on Labor Day, I assume. But it's cool. We appreciate it, guys. Thanks so much. Thanks, Ken. Pumping up that like button hype. All right. Yes. Yes. Yes, Philson. I am still bearish. So we've got a couple levels of unfalsifiable data here. We'll go down here to the 4-hour chart here in just a little bit. So here on the daily, here's what I want to see. If we cross and close above the daily baseline, I will exit my short, and I will wait for everything to get bullish, and then I'll look for a swing long. I am really hesitant to be looking for a swing long off of this. Why? Because let's just be honest about the possibilities here. There's three things that are going to happen, and let's apply statistical probability to those three things. Okay? Bitcoin's price has been consolidating since we peaked over here on the 26th of June. Okay? Massive movement to the downside. Big volume coming in on the downside. Big volume coming in on the upside after being in an established trend. Huge volume coming in on after an established trend is already present with a huge wick to the upside, and is not a good sign. That is trend ending volume. And you can see that's as high as price went up. Everybody FOMO bought the top. People use that opportunity to exit their long-term positions, and price has been consolidating ever since, as those who did not sell here have been trying to sell here and here and here and here and here and here. And every time price comes back up, it just gets sold back into, as opposed to a bullish trend that we were in since April, which is there's buying and then buying and then buying. So 3 waves of this buying, right? So buying, consolidation, buying, consolidation, buying, consolidation, selling, consolidation, selling, consolidation, selling. It's a very different market structure, and you have to be aware of what market structure you're operating into. So there are 3 things that can happen from here. Option number 1, we continue to range, meaning we're going to form a lower high. Okay. So that means there's not a whole lot of space to go long on, especially now. And I don't trade reversals when I don't have to. So this trade is less attractive to me. This trade is less attractive to me right there. That's not my trade. That's somebody else's trade. There's a whole lot of problems with that. My trade is, So my trade was this trade, right? My trade was bearish structure, catch the short, bearish structure. My trade will be this trade right here, catching the trend, following the trend down. My trade will be consolidation down here at support, and then breakout movement, and then catching that swing long, whether that's back up to test resistance or whether that's actually going to form us a higher high. I did not want to do that. Control Z maybe. Good. So. Gasp, Kendi. we cannot talk about Elliott waves. So that's potentiality 1. We continue to range. Okay. Potentiality 2. And I would say this really is congruent with that, right? We continue to range, meaning that there's not a whole lot of room. There's not a whole lot of wiggle room to take the long, especially at this price right now, right? Option number 2 is it's a short squeeze, which really is more of a extrapolation, a little bit more nuance from option 1, meaning we're going to pump up, funding is still negative, meaning we're trying to squeeze out late term shorts, and we're still heading down, which is, if I were to speculate, that's really where I'm at too. That's really how I view this. And option number 3 is this is the time that it's all time high, right? So, and if that's true, if that is true, right? If we are, if this is the time, right? And I think to break that down, I mean, where we're just going to go all time high. Yeah. Selling up in them 20,000s. You know, if that's really going to be the case, then there's going to be plenty of time to get into the swing long. And what's going to tell you that the swing long is attractive right now? What's going to tell you that the swing long is attractive right now is most likely going to be things like Minx turning bullish, Wadatar explosion printing positive momentum, time transformation crossing above the 0 line, crossing and closing above the baseline, crossing and closing above the secondary the tertiary baseline. The secondary baseline would be good. Getting the 13 back above the 55 exponential moving average and getting that bullish moving average crossover, letting us know, hey, we are now operating in kind of a bullish market structure right here. And again, just on the daily, I want to point our attention to the 21 exponential moving average, which has been serving very, very well right now. We also have, I want to make sure I say it right. Yeah, that is the simple 100 exponential moving average. So we got this nice little shelf right here with the simple 100 exponential moving average and the 21 exponential moving average. We are above the daily baseline, but bouncing into that level of resistance right there. So I don't want to take the swing long. I want to stay in my position. And if anything, again, as I said, this is an opportunity to re-add to one's position because we talked about this and you have a very clear method of falsifiability, which is, should price close above the baseline or should price put in another bullish signal based on whatever trading system that you're using, then you exit your position because it's the one time that we attempt to take a reversal trade in PTP structure, which is utilizing whatever your baseline is. And again, if you're utilizing the 21 as your baseline, which we've talked about at length, utilizing the 21 as your daily baseline, you're going to get less false signals, but you're also not going to get in as early into a trend. So there's positives and negatives, right? There's positives and negatives to using the 21. Did I sign a non-disclosure agreement with Elliott? Yeah, I did, man. I did, yeah. That's a non-compete. Is it worth it for a 0.3% gain with the downside risk present? I mean, the FOMO is real, man. So let's go over to the monthly setup. You know, what's interesting about this this monthly chart right now, and of course, like we literally just opened this monthly, so there's no data here that we can really act off of. But just on an intra-month basis, we have basically retraced the entire not true range, but body range of last month's candle, which, you know, say it what you will. I just think it's kind of interesting, if not a little bit sad, but I digress. Did close the weekly below the weekly baseline. We did close the weekly below the 13 exponential moving average, and that's pretty indicative to me. I mean, generally, I'm looking for like a pretty significant movement from there, and we've got quite a bit of time for the weekly to actually do something. But that really makes me consider until this next weekly closes. I mean, that was a bearish weekly setup that we got off of the last candle close. Sonny, what's up, my friend? $10,271 Texacoat. So, let's see what happens at this level. 10,116. We got a lot to talk about, though, so we might come back to this. Rather than just sit here and stare at Bitcoin's price. What's going on, Johnny? The man, the myth, the legend. I should have grabbed some water, man. We got... Cool, we do got music. Insofar as what, Asifoy? Hard to look away from Bitcoin. Well, when it's doing stuff, yeah, for sure. Well, there's definitely music playing. Let me turn it up. Let me know if that's too loud. I'm gonna put it right there. Wait, are you saying that a wall just got pulled on Binance? They would never spoof orders on Binance. That's just crazy talk. Yeah, happy Labor Day, guys. I like it, man. It's a nice holiday pump. I just wish that it was occurring, you know, like... here. You know? I just wish I was more excited about it, you know? Because, you know, I always, listen, I'm a Bitcoin investor, so I've got Bitcoin, and I always love to see Bitcoin's price go up, because if you hold Bitcoin as an investor, that's always good. You're like, hey, I have more money than I had yesterday. But I just don't think it's going to lead to legs. I'm absolutely happy to be proven wrong on it. It's just going to take, yeah, it's not going to be too hard. I'm going to say a day, probably a day to reset the indicator long. Probably a day, yeah. Following this. So kind of depends on where tomorrow's close is. But as far as making a decision right now, I mean, I think you've got three, you had actually four. I mean, if you want to get crazy with it, but if we zoom in on this a little bit, let's get rid of that. If we zoom in on this, we had the daily baseline, we had the daily 13 exponential moving average, the daily 21, which is right now where prices stopped. You got the 55 above there as well, and you have our original level that we talked about as a static level of support and resistance, right? 10,116. And I'm largely ignoring the 100 exponential moving average right there. So, but 21 working out really good. 13, you're in drawdown right now if one had gone into a trade on that. We just kind of got to see where the close is. I ordered a new, there we go. I ordered a new keyboard, so hopefully we don't have to see that anymore. So hopefully this thing stops glitching out on me. Yeah, see, the funding rate's still negative, man. It dropped to almost nothing. That's almost a nothing funding rate, but it's still negative. Roy says, second live stream where Bitcoin makes a move. I'm thinking the money is on whale watch for cracking crypto. I am happy to see the pump with you too, Ossifoy. Is 200 Bitcoin considered a wall in Binance? I mean, well, let's go look at, let's look at numbers. Let's go to coinmarketcap.com. Let's go to Bitcoin and let's go to historical data. And actually, we're going to go to markets, my bad. And Binance, 24-hour volume, 346 million. So 200 Bitcoins at $10,000. It's definitely not a nothing. Math Tutor says, hey, I recently heard Bennett talk about how there isn't spoofing on Coinbase Pro. Yeah, I highly doubt that they're spoofing on Coinbase Pro. Coinbase genuinely takes their order book seriously. So we're talking about a matching engine that will lock you out if you are attempting to place trades that look spoofy, which means you are constantly putting large orders on and immediately removing them with no intention of them ever getting filled. Nobody likes that. What time does the daily close happen? At 0000, well, actually 11:59:59, or excuse, 23:99:99. 23, 59, 59. There we go. Oh, no coffee. Universal Coordinated Time. So that's 7 p.m. Central Daylight Time. So where I'm at. 8 p.m. on the Eastern Seaboard. Okay. Why is the computer lagging? That's very odd. Have I been infected with a Monero Cracker Jacker? It's the only thing I can think of. Must be BitMEX. BitMEX must be mining Monero on my computer. There we go. And it went away. Yeah, there we go. Crazy. Could be a cup of soup. Okay, yeah, we got so much to talk about, guys, and we've got to go to break in 22 minutes. So we'll come back to this. So, but just so that we're on the same page, let's go to the daily. And again, this for me is the re-add zone. This for me is the re-add zone. If we close right above where we are, then that's invalidation of the trade, and you take the L wherever the L is, but we're right there. I will come back from break with coffee. A very large cup of coffee. They were selling off 100 Bitcoin packs at a time. Let's go over to... So the things that I specifically want to talk about. I don't know if I want to switch over to the other scene. I think I'll stay on this scene and just talk about it so we can watch Bitcoin's price. Okay, great. So I want to talk about... So the first thing I want to talk about is, I think that we were talking kind of earlier, and if I were to sum up... So let's say that you haven't taken the Pathways to Profit course, right? So let's say that you haven't learned how to build technical strategy from the ground up, using the tools and using the method that I utilize to teach people how to do so. So what are some simple tips that I would give to a trader to implement into whatever they're doing right now? There's quite a few, but keeping it very simple. The first thing, and I think it's absolutely essential, man. I think it's absolutely essential, is keeping a trading journal. You have to keep a trading journal. You just have to. I swear, I talk to so many traders, and I've mentored so many, I've mentored winning traders that came in with a pretty good strategy, and they're just like, hey man, I just want to optimize and flesh out and move into different asset classes. And I'm like, great, you've got a good structure, and we're already starting off on the right foot. I've talked to people who literally every time they click the green button, lose money. And when they click the red button, they also lose money. So, I've seen just both spectrum of, traders who have a plan and know what they're doing and traders who don't. And everybody has a story. Everybody is unique. So everybody's going to approach trading a little bit differently, and everybody's going to have a slightly unique strategy, which is beautiful and amazing and awesome, because there's a lot of different edges to grind. There's a lot of different edges to grind in this market. There's so many opportunities for everybody, especially in crypto. But keeping a journal is absolutely essential. And I have not yet met a consistently profitable trader that does not keep a journal. I have not met one. They're probably out there, but I haven't met one. So every successful trader that I've met has kept a journal for a very long time or still currently keeps a journal, and used a journal to have a hub of objective data to move them from learning to trade to being break even to becoming profitable, right? That's really the transitions, like learning, researching, implementing, backtesting, strategy testing, testing out your edge, right? Being a break even trader, because you're figuring out the bugs in your trading system and then becoming profitable, right? You need a trading journal. The reason you need a trading journal is because if you don't keep a journal of what you're doing, you're going to be relying on your memory and your subjective interpretation of past events. And that is going to fail you, right? So there's a lot of research that's been done on this. The obviously one kind of like popular study is, they get people together and then they'll have like somebody come in and like fire a gun or something like that, or, like drop a book, being a little less like, being a little bit more PC there. And then they'll ask everybody to describe what the person was wearing, what the person was, doing, what did they look like, where was the table in the room, things like that. And people will recount a different version of the events. And the reason why is because there is a real problem with creating false memories, with misinterpreting past information, because your brain is a swirling miasma of subjectivity. And I don't know, man, you got confirmation bias that's floating around in there, and you've got all the deficiencies and weaknesses, as well as strengths and benefits that you are bringing just with yourself as a human person. And that has no place in trading. Trading is cold and it's impersonal and it's statistical and it's a numbers game. And so you need that very concise journal to record accurately what you actually did, right? Because if you're not doing that, if you're trading willy-nilly, and, I'm going to add a little bit here, and I'm going to add a little bit here, and I'm going to add a little bit here. And, you start to forget about losses. Your brain has a negativity bias to where you will go back and you'll just incur large losses. And your mind won't look at the small winners that if you would have just modified your strategy to not accept that large loss because you got emotionally attached to a position, you would have actually been doing well. You would have made money out of the market. So the journal is also essential for structure, right? For pushing you into a routine, right? So when one tends to keep a journal, they tend to take similar types of trades. And when they take, because they're going to be entering something into a spreadsheet or writing down something on paper, and they're going to eventually conform to a format because you're going to want something to fill in that line, right? So like what type of trade or market or position size. Using the journal also makes position sizing a habit, because in the journal that we provide, one of our members I had produced an advanced trading journal and advanced position size calculator that covered things like combined risk, obviously calculated position size based off of your equity and your risk percentage. And I also had introduced concepts such as combined risk and adjusted risk for either trading altcoins or for just looking at different ways and strategies of risk management. We also have the Kelly criterion calculator, and we go over the Kelly. We saw stuff that we have material on in the group. And then one of our members, Jonathan, he did a fantastic job. He just took that to the next level of the trading journal, and it emphasizes the position sizing. And I just can't say this enough, man. I say it every day, and I just want people to get it. Half the battle is won with the calculator. Half of the battle is won when you know your absolute maximum dollar risk going into the trade, because you're going to have winners and you're going to have losers. But the goal is to have an asymmetric distribution between your winners and your losers, or you can actually have an asymmetric distribution of winners and losers, i.e., not in your favor, i.e., you can actually have more losers than winners and still make money because of your trading strategy, right? You can lose more trades than you win and still make money. And that all comes down to position sizing and position sizing. So how can you be confident? How can you not let losses affect you so that you carry on with the plan? The way that you overcome that is by position sizing. You position size ahead of time. Wally, man, thanks so much, brother. Throwing down the $20 gauntlet out there, saying, what's up, guys? Getting the hype train going. What did you say, brother? Let me pull that up, man. He said, trading is cold, and it's impersonal, and it's statistical, and it's a numbers game. Congratulations on unlocking bot level 7. Learn, earn, and don't get burned. Let me do something real quick. I think this is just going to be... Nope, not that. Just a second, man. I want to pull up and make sure I get this right. Okay, it's number 5. I want to read the learn, earn, and don't get burned in the robot voice. So, just for you, Wally. I think your Wally voice is a lot cuter, though. I'm not gonna lie. Probably a lot better, man. But hey, I'm doing what I can with what I got. Thank you so much, man. Highly appreciated. Shout out to you and Gunbot University, my good friend. You guys are absolutely crushing it over there. Okay. So if I haven't convinced you yet that a trading journal is an absolute necessity as a trader, let me just impart to you again the comment that I made at the very beginning. I have not yet met a consistently profitable trader who does not now, or at one point in time, kept a trading journal. Absolutely essential. And I'll tell you this, you need a trading journal so that you can have a mentor, right? And I think a mentor is pretty essential for learning how to trade. Whether or not that person actually tells you what to do or actually guides you as far as how you trade, what you need though as a trader is somebody to hold you accountable for your mistakes. Okay? So if you are going to say to yourself, okay, I've developed this Ichimoku strategy and I'm going to trade Tenkan Kijun crossovers and I'm only going to trade when price is above the cloud. Okay, sounds great. I'm going to do it on the 1 hour time frame. All right, good, great, sweet, awesome. Now, how are you going to keep yourself accountable so that you're going to do that? Because, you know, most people who trade or most people who do anything, they just say, well, I'll just hold my own self accountable. Human beings aren't very good at holding yourself accountable, right? We all have little mental deficiencies where we're like, it's okay. Just this one time. You've been working hard. Fuck it, nobody tells you what to do. You know what I mean? Like, that's how most people's brains tend to work. And so you need somebody to hold you accountable. And we usually kick and scream and push against this. And this is why most of us suffer in silence, right? Which just like made me think of like, I know I'm wrong. Please let me suffer in silence. Do. You guys remember that song? That's a good one, man. I'll pull that back up. I'm gonna be twirling some glow sticks on here and shit. And that position sizing really dovetails with the second thing that I wanted to talk about, which is the second thing I wanted to talk about, which is how can you not let a trade personally affect you, right? Like, so many people get emotionally attached with their trades and like emotionally caught up with their trades, and they push their ego into the trade. You know, like, so for example, I come on stream every day and I'm like, hey guys, this is how I'm trading Bitcoin right now. And I think price is likely to do this. And I'm putting my money where my mouth is. And I'm going to take that trade. And sometimes I'm right and sometimes I'm wrong. You know? Like, we'll go over to... oh, this keyboard is killing me. Go over to currentresults.krakencryptocurrency.com over here. Where we post our trading results. All right, so check it out. Week 1, I was overall wrong. I lost 0.96% my first week of August. Made 38% in week 2. Let's see here. Made 56% in week 3. And I need to close out the final week because I need to post the finalized and finish closing this all out. And then this also needs to be adjusted for actual P&L. So this is just ROI right now. So, again, look at these losing trades. Do I win every trade? No. I take losses. And sometimes I have little mini losing streaks. And that's okay, because it's position sizing and it's strategy. And that allows me to continue to make money at the end of every month. I end up the month with more money than I started with. Now, that's not all the time. I haven't closed out a month in the red in a very, very, very long time. But I'm okay if it happens. And I really think that the way to avoid that is, A, time in the market really helps with that. Like, just trading more and having more experience. But knowing your upfront risk, like, really helps. Like, I know for a fact, if I am using 2% risk, it's going to take many trades to blow up my account. It's going to take many trades until I actually have to stop trading and reset and reevaluate my strategy. And so far that hasn't happened yet. But if you don't have that, if you don't know your upfront risk and you're just position sizing willy-nilly, it only takes one trade to wipe you out, man. And I just don't understand that. I don't understand I do. It's desperation, right? It's fear, it's greed, it's all the evil, non-essential things in life. And I think that most people just have not accepted this. There is no such thing as a get-rich-quick scheme. It's just not going to happen. Like people just think that they're going to buy, Bitcoin and or anything, or just take one trade or 100x on something, and they're just going to get rich, and it's just not going to happen. There's no such thing as a free lunch. It doesn't exist, man. And I think it's like such an insidious part of life is that people know that, and people like me try to teach you guys that and make you accept that you, guess what? If you want something in life, you just have to go out and work for it. Not only because if you get it some other underhanded, sleazy, or quick, fast, easy way, you're not going to keep it. This is why people that win the lottery end up going back poor and broke and hating their lives after about 2 years. There's a lot of research on this. Winning the lottery is not a good thing, right? You may think it is, but anything that you don't work for, anything that you don't deserve that you get, you fuck it up. Unfortunately, you need to deserve and earn things so you can utilize them to their maximum potential, because society is not well served. Humanity is not well served by putting something valuable to you in your hands if you're not going to use it very well, right? Hashtag relationship advice. And the point here is, in trading, this is a real opportunity. This asset class is a real opportunity for a lot of guys coming in to do a lot of damage with $5,000 or $10,000. A lot of damage with $5,000 or $10,000, as long as they keep their mind right. But most guys are coming in with $5,000 and they think that they're going to use a lot of leverage or take a couple sweet trades and just make 30, 50, 75 grand, make money real quick. This ain't that. This ain't that, fam. You guys are in the wrong place. But if you want to come in and put some work and time in, you can be a consistently profitable trader and make this your active form of income. There's enough volume, there's enough liquidity, there's enough capital, there's enough edge. It's so volatile. It's amazing. It's amazing. And you can work for yourself, you can work from home, you can work from a computer, you can travel. It's a pretty awesome lifestyle. I'm not going to lie. You don't answer to anybody, right? Only people I answer to are the people that keep me accountable for my own trades, which I still have, right? I still review my trading journal with my peers because they need to keep me accountable. Because what has pulled me out of the chaos and despair of life has been structure, strategy, and discipline. And if I lose that, then lose everything that's given me my edge and made me good at life. All right. When we come back, we're going to talk about falsifiable language. We're going to talk about the Lightning Network, and we're also going to talk about Justin Sun. Yes, we're going to talk about Justin Sun. Just because why not? Talk about Justin Sun. Have I read The Intelligent Investor? Yes, I would recommend it. It's a good book. Yeah, for sure, Wytho. Cogito Ergo says, I'm always astonished by those people that fuck it up. My lotto winnings would go straight into more real estate. I think it's probably because people that buy lottery tickets are not investing in real estate, Again, it comes down to, people just don't want to accept this. Most people absolutely suck with money, right? Most people just suck with money. Managing it, making it, holding on to it, growing it. But it's a skill you can learn. It's not like physical strength where you can be born with more or less fast twitch or slow twitch muscle fibers. It's not like it's not rocket science or physics where you have to go to college and have, and really start early and be very acute with the mathematics. As long as you just sit down and do stuff that, it's just all the non-sexy stuff that everybody knows. Develop a budget, put money away for savings, put away an emergency fund, go to a trade school if you're making minimum wage, Maybe not directly, Eric, but I think there's a lot of lessons in there that would improve one's overall thoughts, and improve overall one's approach to the market. My top recommended books are always Discipline Equals Freedom by Jocko Willink. I think that's one of the best books in human existence. You know, I could be like really, you know, chintzy and say like, because I think they're great books and I think they help out, but you know, the classics like 48 Laws of Power, Sun Tzu's The Art of War, things of that nature. I think those are good books, but you know, Discipline Equals Freedom is way better and way more practical and will make every aspect of your life better if you just read that book and take it to heart. But Trading in the Zone by Mark Douglas is probably the best trading book out there. Trading in the Zone by Mark Douglas. The New Science of Technical Analysis by Tom DeMark. It's an old book and it doesn't have a lot of applicability to the way a lot of you are going to trade. But that's the first like serious trading book I read, and it holds a special place in my heart and just got me into thinking about the numbers game, playing it like a numbers game. Did I read any books before day trading? Yeah, I mean, I read a lot of like swing and day trading and pattern books and candlestick charting and blah, blah, blah. None of it really helped me out make money. I'm not gonna lie. Books on technical analysis have not helped me make money. Just being objective. Books on technical analysis have not helped me make money. Lots and lots of back testing and trying different indicators out have helped me make money from a technical analysis standpoint. And that's why I've developed the course and I show people how to short circuit all the long, lengthy process and steps that I took. But when it comes to what has improved my life, what has improved my ability to earn, to do good with the money that I do get, right? Because, you know, it doesn't matter if you make a whole lot of money if you can't, you know, utilize it properly. You know, if the additional income in your life is not improving the quality of your life, then you have a problem. I would say that you know, Trading in the Zone, Discipline Equals Freedom, for sure. How to Win Friends and Influence People. Those are books that really actually improved my life. 12 Rules for Life by Jordan Peterson has also really helped lately. But that's a newer book. But really, really, really helped me. I think that I already had good structure and good framework. And well, I mean, I was already doing pretty well in life. But then I read that book and I really got words. I really got words for everything that I wanted to talk about. Anyway, guys, it's 1 o'clock. We're gonna head into break. When we come back, we're gonna talk about the Lightning Network. We're gonna talk about the last aspect of technical analysis. And why most technical analysis doesn't work and is wrong, and dangers that you guys should watch out for when listening to other people talk about technical analysis, and when you're looking at the way that you guys do technical analysis. And like I said, we're going to talk about Justin Sun's podcast, and we're going to talk about the Lightning Network, guys. So don't go anywhere. Let me know if you got any questions. Let me know where your guys' mind is at as far as the charts, as far as what we're talking about. Give me some feedback on what we just covered. That'd be absolutely fantastic. We're not going to, and we'll be right back, so don't go anywhere. If you guys want to support the channel, there's a link to the ByBit affiliate link down there in the description, bybit.krakencryptocurrency.com. If you want to trade on the best exchange out there for Bitcoin futures, we'll be right back, guys. Hey guys, welcome back. We're here. We're near to the turning point for Bitcoin. If you guys are just joining us for the second hour, make sure to slide on back to the first hour and look at the Bitcoin analysis that we did as far as looking at those monthly and weekly and daily levels and our further sentiment on where Bitcoin's price is. Thank you so much, BobbyG, for winning the crypto comment giveaway prize of the day over at X42 Protocol. And we also talked about the importance of keeping a trading journal, how to not let losing trades affect you. And what we're going to go into now is we're going to cover some current events in cryptocurrency as well. I really want to talk about the Lightning Network. I think that's really important to talk about because I think that most people get the Lightning Network wrong when they talk about it and understanding like what it is, what its purpose is, and how it fits into the overall Bitcoin development ecosystem. So I think it's a very important conversation to have. And I also want to talk about the danger of using unfalsifiable language when it comes to technical analysis and what technical analysis can and cannot do. And I think that's going to be very helpful for you guys as traders, especially the newer traders. So with that being said, let's slide on over into the charts. I think it's this button. Is it this button? There we go. Hey, buttons work. Buttons work. Okay. Heath Schroeder, man. Welcome to the community, my friend. You know, I am starving. I'm not gonna lie. If you guys want to help the environment out, don't get paper straws. Get one metal straw. and use it all the time. It's that simple. Okay, Bitcoin. Let's see if we can get some more FOMO pumping going on. Consolidation over the last 30 minutes, and now trying to get above this range, but nothing right now. Yep, Heikinashi trend did flip as well on the daily. We did flip to a bullish Heikinashi. Now that doesn't matter, we haven't closed the candle yet, but again, good exit strategy for waiting for that Heikinashi candle color to flip as well. Facts, Justin. Facts. So let's talk about current events. And to do that, and then we'll come back and we'll talk about falsifiable language. Okay. Let's see. Right here. All right. Yes. And you know what time it is for right now?
And now, the news you trust, the stories you need to hear. Because in the day and age when we get our news sources from YouTube and Twitter, let's listen to the guy with the good microphone and the nice-looking studio.
Ventriloquism. All right. Okay, so the experimental Layer 2 network solution known as the Lightning Network has had security vulnerabilities identified, which could potentially lead to loss of user funds. So Blockstream engineer and Lightning developer Rusty Russell, that's a heck of a name, Rusty! Reminds me of, what is that, National Lampoons? Yeah. Has published the warnings to the Lightning mailing list, so the Lightning user and developer mailing list, recommending that Lightning node operators update their clients right away. The main software client that is affected, so it's not really in the Lightning protocol, it's always in the implementation, and the main error is with the wallet software Eclair, which is the most popular wallet Lightning wallet out there currently. Now, the exact nature of the vulnerability is unknown, and that's the correct way to do things. They're going to publish the full details on September 27th, 2019. And the reason why the details are unknown is because that prevents others in the meantime exploiting the bug. And that gives Lightning devs and the related projects time to update their Eclair clients so that it's not an error. So nothing insane, nothing crazy, really not a whole lot to talk about here, to be honest with you. We don't really know what the vulnerability is. It's in the Eclair implementation, to the best of my knowledge, or that is at least the main implementation that is developed, or the main implementation where this bug has been found. Just in regular OPSEC protocol, they are alerting individuals that they need to update their clients, but not actually giving details of what the vulnerability is. Otherwise, people could exploit that vulnerability. So I will let you guys know as soon as I know some more things. And here is the original. You guys can't see this too well. I'd have to flip over, but this is the original. This is the mailing list excerpt where it just says security issues have been found in various Lightning projects, which could cause loss of funds. Full details will be released in 4 weeks, 2019, September 27th. Please upgrade well before then. Affected releases are going to be CVE C Lightning version 0.7.1, CVE 2019 LND 0.7, which is the Lightning Daemon as far as I'm aware, and Eclair version 0.3. And then he has that signed with his PGP key. So, man, what is up with a little bit of lag here on the computer? Anyways, moving on. So off the heels of that, said we wanted to talk about the Lightning Network, and we've got a lot more to talk about too, but I do want to cover these, and these will highlight really well where I want to go with this. So more Lightning FUD circulating based on statistics surrounding the Layer 2 solution, suggesting that the Lightning Network is struggling to grow. And the reason that it is struggling to grow is because it currently lacks good economic incentives. As you guys are aware, one of the main reasons why Bitcoin has grown and continues to grow is because there is economic incentive to mine cryptocurrency, to mine Bitcoin, which keeps the mining process going because it is financially lucrative for individuals to mine Bitcoin, and also financially lucrative for them to behave honestly, right? To not attempt to cheat the system and attempt to create false blocks or stuff blocks with bad information or bad data. Because their blocks will not be validated by other miners, i.e. they will have expended energy and resources and not receive the mining reward if they are found to be fraudulent, because the coins that they will receive will not be on the right chain. They will basically be mining on an orphan block or an orphan chain. So with some node, and this is all kind of generating from the fact that some Lightning node operators are operating their nodes at a net loss of profit. So one such story is circulating right now of one such Lightning node whose role on the network is to lock up their Bitcoin liquidity in order to facilitate fast and cheap payment channels and earn commissions on these micropayments. That is the economic incentive for the Lightning channels. An individual will lock up their Bitcoin and provide liquidity in the network, and they receive commissions, basically a transaction fee, commissions from these micropayments. So the experimental network in its current state is not very profitable to operate as of now. Just as when Bitcoin was first began, there was not a whole lot of financial incentive. There was, incentive in the form of receiving a lot of Bitcoin, and we can see that that's worked out very well for individuals that participated back in the day. But in dollar terms, was not very profitable to mine Bitcoin back in its genesis. And it was not very profitable to mine it for quite a while, actually. So the network in its current state is not very profitable to operate right now. One Lightning node operator who has locked up about $5 million worth of Bitcoin claims to be operating at a loss and only continuing in an effort to support the network. And I think that this sentiment is very congruent with the sentiments of individuals who were mining Bitcoin back in the day. And they weren't making a whole lot of money off of it in the here and now, but they were doing it to support the network. Of course, everybody has their own individual incentives. And we do know that overall, it is structured, I would argue that it's structured in a way to provide good incentive. Hey there. Forgot the Motorhead poster. So, now, this type of altruism is commendable, but it doesn't appear to support the long-term growth of the network the way that a proper incentive structure could. Now, of course, this is a consequence of the underlying utility of Bitcoin itself, with a shift toward a store of value as opposed to a currency. There just isn't a strong demand for micropayments in the Bitcoin space right now, regardless of what people like to say. There's not a massive demand to utilize Bitcoin as a micropayment solution. And for the exact same reason that a lot of altcoins have marketed themselves as being, faster, better, cheaper than Bitcoin, but their price continues to drop and they continue to not get the adoption that people would say that they maybe should get, because there's just not a huge demand to have, there's just not a huge demand in the space to have a cryptocurrency alternative to micropayments, right? And the reason why is because the current solutions of that are fairly convenient. PayPal, Venmo, credit cards, debit cards, those things happen pretty quick, and there is not a huge demand. There's not a huge incentive right now to look for alternatives in mass, right? And this kind of goes back to that Saif Adinamus, and I can't remember the name of the individual from the Cato Institute that he was debating with at the Soho Expo, where they were debating, does Bitcoin have the ability to replace other monetary systems? And again, I think Saif continues to make the exact same point, which is that we already have the technological solutions to a lot of these payment systems, right? But what Bitcoin allows us to have is the underlying currency that cannot be manipulated by a central bank, whose inflation level is known, the main point here is that you have a currency that is government hard and unconfiscatable. It's unconfiscatable. The supply. It's unmanipulatable. You can't inflate it. You can't produce more. The government cannot devalue it or debase it. The government cannot take it from you because it's unconfiscatable. Designed to be unconfiscatable with the proper OPSEC. And the greatest thing is that it offers settlement in a very short period in time. So although PayPal, which one would consider, PayPal, just to make sure everybody's on the same page here, PayPal is a layer 2 solution on top of a payment network known as the United States dollar, or on top of a currency known as the United States dollar. It's really more accurately, I think, technologically, it is a payment network utilizing a currency built on top of a social network utilizing the currency, in this case, the United States dollar. And so just as Visa is also a payment network, it's a payment solutions network built on top of a social network of people that use a currency. Because what is a currency? What is its utility? It is a social network. The value of a currency is, can I use this? Is the network for this currency large enough that I can use this and transact with the majority of people and get the goods and services that I want? Now, so as I said, the consequence of the Lightning Network's current state is a consequence of the underlying utility of Bitcoin itself, with this shift toward the store of value as opposed to a currency, because there's not a strong demand for micropayments in Bitcoin right now. To fuel the demand, because if there was a large demand for micropayments in Bitcoin, that would fuel the demand of the Lightning Network or equivalent payment processing providers for this space. But there's not, because the solutions that currently exist are not unattractive. They're very helpful. And in fact, most of you watching the show, I would say the majority of people watching the show in your daily lives are going to use your credit card, are going to use PayPal, are going to use Venmo, are going to use whatever is your regular payment solution to pay for things more quickly than Bitcoin. However, that does not mean that Bitcoin is invalid, because Bitcoin can currently be used to send large amounts of value cross-border very quickly with final settlement. With PayPal, with Venmo, with Visa, with banks, with central bank ACH transfers, with wire transfers, final settlement between the banks does not occur for weeks, right? So when you pay somebody in PayPal and the money shifts, what we have to understand is that there's no final settlement there. That is a ledger entry in PayPal's books, right? There is no actual physical delivery, right? There's no physical delivery. In Bitcoin, that's what you have. You have final settlement. You have physical delivery, right? Now, of course, we're talking about physical delivery in a digital aspect, but one of the great innovations of proof of work and of Bitcoin in the first place was creating digital scarcity. So providing that same amount of, in a final settlement, of providing final settlement, i.e. physical delivery, in an unconfiscatable way so that the transaction cannot be reversed. Now, it is possible, we could speculate that if and when Bitcoin's price stabilizes and does not have volatility, then we would see an increased demand in micropayments. But I would argue against that. I would say that it's a pretty common trope that you want a currency to be stable, right? You want a currency to be stable. And the more people that use a currency, the more stable the unit of currency generally gets. So, for example, if you compare the United States dollar to Bitcoin, obviously, one cannot help but obviously see the lack of volatility in the United States dollar. This is something that drops in value very, very slowly over time. Whereas Bitcoin, obviously, as we can see with today's candle, can move very rapidly in a very short period of time. Now, but I would argue that is not the main. That's not the main reason why we would see micropayments develop in Bitcoin's price. I would say that we would begin to see that development if the current solutions to payments became unattractive. So if PayPal started dropping out transactions en masse, if your Visa card became unreliable, that I think that you would have to actually see the current systems that most individuals are currently using to utilize for actual payment of small payments. You would have to see those systems become unattractive to see a huge demand for micropayments in Bitcoin. So, and, because the reality is we're currently in an era of hoarding and developing custodial solutions to Bitcoin. I mean, obviously one of the bigger news is of last month was the backed warehouse, the custodial solution that Backed introduced to facilitate its physically delivered Bitcoin settlement futures. So it's a little wonder that a network aiming to leverage future economies of scale will struggle today. So I want to point that out. But where I really want to go from this is that the utility of Bitcoin, what really makes Bitcoin useful and better as an alternative to the United States dollar as a world reserve currency, and what makes it attractive as a store of value, is it does not have to have a major use case in the form of micropayments. It doesn't need to. The development of the Lightning Network is not a weather vane for Bitcoin. See, most people get it confused, in my opinion. They're like, there's a lot of FUD and uncertainty, and I think miseducation and misinformation about what the Lightning Network is and what it's designed to do and how it's being developed and what it is. And so people conflate, and again, I know you guys see this. If any of you are on Twitter, you're going to see this, because there's all people that are like, man, Bitcoin's an absolute disaster. The Lightning node is a mess, or the Lightning network is a mess, blah, blah, blah. Thus, Bitcoin will fail, which is absolutely ridiculous. Like, it is like that statement shows nothing but ignorance for what the Lightning network is. And I don't mean that to say that, oh, I've got so much faith in the Lightning network, right? I'm actually fairly indifferent about the Lightning network because it's a layer 2 solution. It's a layer 2 solution trying to solve a problem that I don't think we have. The Lightning network is one of many protocols that is being proposed as and it's experimental, but it is a layer 2 solution to the underlying layer, right, of Bitcoin. So the Bitcoin protocol is layer 1. And so layer 2 developments do not subtract from the use case of Ethereum. Or excuse me, from the use case of layer 1 in Bitcoin. The reason why I Freudian slipped Ethereum there is because I was going to go on from here and make this kind of analogy between, so if Ethereum develops a smart contract, right? Well, you know, again, we could really have the argument here. So what is the difference between like an individual smart contract on Ethereum or smart contracting ability in the first case for Ethereum, and the difference between the Lightning Network and Bitcoin? So the difference here is, and again, when we were having this conversation, you know, somebody brought up the point where they're like, so what is the difference between, you know, basically this concept with Ethereum, or why do I not see as much potential in Ethereum as I do in Bitcoin? Well, because I think they're trying to do two very different things. And I think that Ethereum, part of their core fundamental value is the ability to offer smart contract solutions. So if you couldn't do smart contracts on Ethereum, I don't think that would be as valuable, or that would have as many use cases. Because otherwise, I mean, you just kind of have basically what Bitcoin is, right? I mean, Ethereum's main sell is to be a global computer, and to do global computers, you have to be able to do smart programmable contracts. Stuff that you can already do on Bitcoin, by the way. So, but obviously not as complex and convoluted. But again, there's lots of cool smart contract solutions that are on the Bitcoin network and have been for quite a while. Multi-sig, requiring multiple different wallets, time-delayed wallet locks, all those things. Those are all smart contracts. So the difference, I think, between Bitcoin and Ethereum on a fundamental level is not only the centralized control that the Ethereum Foundation has, as opposed to Bitcoin's decentralization, but it is the main use case of Ethereum, which is smart contracts. And so in that vein, they already have a lot of stiff competition, because you have Cardano, EOS, Tron, many others that are attempting to do basically the same thing. And so you all have a lot of people trying to do basically the same thing, and they're all just trying to do it better. I don't see, and again, one could argue that that EOS, Cardano, Tron, they're all have developed a fairly large market cap, and they all are trying to do basically the same thing of Ethereum, but in a slightly different way, but same kind of concept, same fundamental. And so there's a lot of competition there. And so really only time will tell who's going to be the best global supercomputer with smart contracts, right? And are they going to overcome their difficulties? Which of course they will. It's just a technological problem. We'll get there. Humanity progresses and pushes technology forward and forward. But I don't see a valid contender to Bitcoin as being a replacement for dollars, right? Ethereum is not going to be the world reserve currency. I don't think it markets itself as that. I don't think anybody's running around thinking that that's going to happen. People just make the analogy that, well, Bitcoin's going to succeed and so will Ethereum, because it does what Bitcoin does not. Granted, you're absolutely right. It focuses on smart contracts. But there's not another cryptocurrency out there that does what Bitcoin tries to do, right? At least not that I think anybody takes seriously as a serious competitor. And for good reason. So the development, and so I just want to make that very clear. The Lightning Network is a layer 2 protocol on top of Bitcoin, right? It is not a weather vane for Bitcoin, for the underlying layer 1 protocol, right? Like, the Lightning Network could completely crash and fail, and Bitcoin would still be just fine. Like, because Bitcoin already does very well what it is intended to do, which is have unconfiscatable final settlement transactions, right? And to build a global system for doing final settlement on chain. That's the purpose. And it's government hard, it's unconfiscatable, and it is resistant to attack. That's the point. It wasn't to be fancy, flashy, fast, quick, free. No. I think Roger Ver is completely incorrect. So this is so getting into the big block, small block debate. Roger Ver is fucking high if he thinks that it is more valuable to have a micropayment cryptocurrency with big blocks and security vulnerabilities than a global payment network where final settlement and unconfiscatability can be by default. right? And that's exactly why people who advocate for smaller blocks, or at least for not switching to big blocks willy-nilly, which is what Bitcoin Cash wanted to do, which is what the, what the heck did they call themselves before they were Bitcoin Cash? Anyway, this debate goes back a whole long time. So if there are major hiccups in payment processing, then Bitcoin is going to develop a significant use case in the realm of micropayments. And the Lightning Network is interesting. It is a promising, competing layer 2 protocol, and there's lots of brilliant minds working on it. But there's just not a massive use case for it right now because our traditional payment processing methods are not experiencing lots of problems. There is a use case now I would say that there is a significant use case for the Lightning Network right now in some countries that have unreliable payment processing solutions. So Bitcoin is attractive right now as an investment and as a store of value that is government hard. And I think there's a large potential that for the most part, the layer 1 solution, so the layer 1 implementation of Bitcoin as it sits right now is largely going to be set in stone. I don't think it's going to change a whole lot, which is good because it's doing what it's supposed to be doing, a reliable government hard settlement layer. The innovations that we are going to see over the next couple decades are going to be layer 2 protocols. So it's going to be very interesting to watch those developments, And as I was talking about with our staff this morning, I think the innovations coming in are going to be, the future is going to be nodes on every smartphone, and we've seen the way that going back to kind of the big block, small block thing, we've seen the Bcash experiment of large blocks, but there's just no need. They're trying to, again, with the same thing, they're trying to solve a problem. They're trying to develop a solution for a problem that isn't there. So, again, the Lightning Network has nothing to do with layer 1 protocol, and therefore it's very important that people understand that anything about the Lightning Network is not synonymous with the Bitcoin underlying protocol, layer 1. Okay? There are competing protocols to the Lightning Network, and just being honest, they're currently novelty use case at best. But there are some brilliant minds working on it, and they are trying to preemptively develop the solution to problems that we don't have now, but that we will have in the future. Okay. Let's talk about just one little thing here real quick. So Tron CEO Justin Sun accused of buying 5,000 Twitter followers per day. I mean, we've all known this. Like, this seems like some pretty regular, like, normal FUD, right? Not FUD, I mean, sorry. Pretty common accusation that's been leveled against Justin Sun. So Josh Reger, who's a pretty prominent crypto commentator on Twitter, he called out Tron founder Justin Sun, and he called him out for buying 5,000 to 6,000 Twitter followers per day. So he detailed this in a pretty recent tweet. He said that his analysis suggests that in 2018, Justin Sun saw a significant decline in his Twitter followers and in Twitter engagement. However, by early 2019, his rate of new followers began to climb to the rate of 5,000 to 6,000 followers per day, as seen in the past week. So, So the tweet in this tweet on this tweet yesterday, Reger said, quote, "Looks like you're still buying 5,000 to 6,000 followers per day. My favorite stat is how you went from losing net negative followers per month to gaining 5,000 followers daily like clockwork in late 2018. So here is his Twitter stats summary, and he went through and did some technical analysis on it. Here's some graphs for it. So it's just funny because I really don't see, I mean, that makes the most sense to me. This is marketing at its finest, because why would you not? Obviously, Justin Sun has an incentive to push Tron out there, and there hasn't been really a whole lot of exciting developments on Tron, I don't think, or I guess a big burgeoning of the Tron community, in my opinion. So that's about all I got on there, guys. Let's slide back over to the main charts. Go back and look at Bitcoin's price. We are getting a 15-minute time transformation reversal signal, which we did get over here, and price did a little pullback to the 15-minute baseline. That's a little bit obtuse, I'm not gonna lie. Again, staying very consistent with those daily metrics above the primary baseline, but running into resistance from from the tertiary baseline, which we've talked about using the tertiary. A lot of people are using the tertiary baseline as their primary baseline, the 21 exponential moving average. And we've talked about the pros and cons of that. So the pros and cons of that are, if you use the 21, you're going to get significantly less false signals. But you're also going to get into good signals better. And one of the nice things about the 13 is that it's just sensitive enough on backtesting to where the false signals that you do take, P&L wise, you don't take large losses on them because of where it sits. Let's scroll up. National anthems. Wally says, I bet the guy who found the lightning bug thinks he's so bright. Yeah, they call him Lightning Bug. Well, thank you, Crypto Beginner Man. If you guys would be so kind as to hit that like button, we highly appreciate it. Imra says, are we going above 10,500 here, or are we be headed back down to Mario and Luigi's secret pipe yard with their coins? What's going on from the Philippines, my good friend? Yes, I am short as well. Speaking of getting high. Was this a big bear trap? Where will this FOMO end, or has the FOMO begun yet? I don't think so. No, I think this is, with funding still negative, funding's going to flip positive here, most likely. But with funding still negative, I still look at this as a short squeeze, most likely. So a bear trap would be a situation in which you incentivize a lot of people to short the bottom. Get out of here. And then you just continue pushing price up. So it's only there's nothing that's happened yet except a large green candle. There's nothing that's happened yet except a large green candle. And that doesn't mean anything. We haven't broken above any level of resistance. We've continued to make lower highs and lower highs and lower highs and lower highs. There's nothing we've broken out of. There's not even a trend line. Let's draw some trend lines. It's just a big green candle, guys. Okay. There's nothing there. Let's see, what else do we got? Maybe there's something here. There we go. Look, there's a big old channel. So this means we might go to like here, and then here, and then like here, and then here. All right? That's how most people would draw something like that. That is going to be a classically bearish structure. Let's see what happens if we draw it like this. Well, that looks a little bit more bullish, doesn't it? That's why that stuff doesn't work. But, I mean, it's just good to point out those descending lower highs, though. What color is the paint? Not sure. Crypto Walk-In Z says, what Muppet hit the dislike? Oh, man. There's some toxic people, man. Spooner, what do you mean by programs, brother? And thank you, man. I appreciate that. What blasphemy is this? Trend lines hurt my eyes after PTP. It is true, man. Watching paint dry, I think was the reference, right? Okay, so let's go back down here and I'll point out just how much more starving I am. Means my background color on TradingView, skid mark silver, proprietary color. Are the likes and dislikes synonymous for Justin? Yeah, they are, man. You feel for, just do what feels right. All I ask is that when you click that button, that you stop and you look in the mirror and you're like, is this where I want to be when Jesus comes back? Just ask yourself that. All right? So if the answer is yes, that's where you want to be when Jesus comes back, with your mouse on the dislike button on Cracking Cryptocurrency's video. By God, you do what's right. But you and I know the truth. You and I know the truth. Yeah, as far as what we do in the group. Yeah, for sure. We do. We offer we offer trade signals and setups. We do that every single day. I post at the same time every day. We have our analysts, and basically their job is not only to provide trade setups and signals, but I think to provide a thermometer to the market, because I think that's the most important thing, right? We teach people through the Pathways to Profit course how to develop their own technical strategy, right? We provide them the spreadsheets and the tools, how to do everything manually, the manual back testing, as well as programmatically in Pine Strategy Tester. So we focus on that a whole lot. But we focus on using non-falsifiable language. We focus on, non-unfalsifiable language. We focus on objectivity. We focus on journaling. We focus on developing a statistical edge, how to test, literally how to test, what time of day to trade. And then we do our best to support everybody with our community. Got to get some turtle wax on that dome, homie. Yeah, it's not as shiny today, man. It's not as shiny today. It's because I did not shave my head this morning. Chowdery, hey, I mean, they didn't free Pimp C when I asked, man. I mean, I screamed at the sky, free Pimp C for months. I don't think anybody's going to get that reference except for Scott. And Scott coming with a very poignant answer, yes. Okay, so I know what I want to talk about as we kind of creep here and watch Bitcoin's price, except for the fact that somehow there's a fly in my studio. Don't move. You're going down. Ah! Nuts. Net profit, one fly BW. It's a sign. Where's my wrench? What was I going to do? Oh, yeah, I know what I wanted to talk about. I wanted to talk about the danger of unfalsifiable language. So, I think this is going to be my first blog article that I write this week. I'm going to start writing blog articles. Excuse me. But hopefully you guys, I'm going to make this like hopefully very easily understandable, and why I think that most people who try to teach technical analysis are not doing anybody a service, and why when people say like, hey man, like, don't damage my drone fly trying to peek at your balance sheet. Hey man, just ask, bro. Just sitting there like, coming in with a drone fly. So one question that I get a lot is, Justin, where should we go for good free education, right? And the only answer that I can come up with that I feel comfortable giving to people is, I mean, honestly, is to join the general Discord, right? Because I can't in good conscience point you to people that more likely than not are going to talk about unfalsifiable language. So again, it's very difficult to try to provide education on this in this free format in a way that is easily comprehensible by everybody and in a way that is uniform. So at least in the Discord, I know that there are students of mine in there that I've trained, and I know that they're profitable, and I know how they trade, and I know that they're going to be giving good advice. But the problem is, if I point you to some place else where you may or may not like learn to trade well, I don't know that. So I can't in good faith and good conscience recommend that somebody be like, oh, well, take this course over here, or go watch these YouTube videos over here, or check out this Twitch channel right here. Because I haven't seen their trading journal. So I don't know if they're profitable or not. So I can't in good faith recommend or not recommend. That's right. So my general policy is like, and on top of that, there is a absolute plague of terrible technical analysis out there, especially in cryptocurrency. Forex is terrible too. Crypto and Forex Twitter are absolutely terrible, but it's bad in cryptocurrency. And that's because the majority of people out there doing technical analysis are using unfalsifiable language, i.e., they're not actually providing good information. So let's break that down. What is unfalsifiable? Well, quick Google search is going to define unfalsifiable as confidently asserting that a theory or hypothesis is true or false, even though the theory or hypothesis cannot possibly be contradicted by an observation or the outcome of any physical experiment. Okay? So, what's that mean in English? It means that people will talk with confidence about what is likely to occur, even though they are they are poisoning the well, basically, which is another logical fallacy, by setting parameters that are unfalsifiable, right? So let me give you an example of how that looks in technical or in cryptocurrency, right? So let's just take like current price, right? So this is typically what you're going to get. This is typically what you're going to get. You're going to have somebody who looks like me, but without as handsome of a shaved head. And they're going to say, all right, man, let's go to the daily. They're going to say, okay, if we close above this red line, then we're going to go up here and tag these levels of liquidity and most likely reject before heading back down. But if we end up closing back below this line, right? If we end up closing back below this line, then most likely we're going to go test support again, right? That's the way that most people talk. And most people are going to say, or hear that, and they're going to think, yeah, okay, that makes a whole lot of sense. That makes a whole lot of sense. Right. If we break resistance, we're going to trade higher. And if we break down through support, then we're going to trade lower. The problem with that is it's unfalsifiable language, because there's only three things that price can do. Price can go up, price can go down, or price can move sideways. Okay? Those are the only three things that are likely to happen, right? And eventually it's either going to move up or down. It could go sideways for a while, but eventually it will move up or it will move down. Markets do not move sideways for eternity. Now, because I've used unfalsifiable language by being not even vague, it's not, so unfalsifiable is not vague, but it's lack of specificity. So, and because we're not talking specifics here, we're not able to develop a trading game plan. And developing the trading game plan is absolutely essential. If this, then that logic. This is exactly how, those are the words that I use in the course. If this, then that strategy. PTP is an if this, then that strategy. If this specific thing happens, I will put on the trade. If this specific thing happens, I will exit a trade. If this specific thing happens, I will increase my position size. If this specific thing happens, I will reduce my position size. Very clearly defined, very clearly delineated, falsifiable language, because if something very specific occurs, then you can objectively look at that and say, well, this occurred, and because this occurred, I now need to do this. When you use falsifiable language or use falsifiable trading strategies, again, so we said if we close above here, we're going to go up and tag these levels. Okay, what do you mean by tag? Are we gonna trade up there? Are we going to close up there? How high are we going to go? Are we going to go like just below this level? Are we going to go to this white line? Are we going to go to this white line? What time frame do we need to close above this red line? The daily, the weekly, the monthly, the 2 hour, the 1 hour, the 4 hour, the 6 hour, the 30 second, the 15 second, the 1 second? And leaving out those metrics is what really neuters you from taking advantage. So one common trope in trading is, oh, I have amazing analysis, but I don't execute, and so I don't make money off my trades. But when I look there and I'm like, yeah, man, we're going to bounce off the support, but I didn't buy, and then I'm going to sell at resistance, but I don't sell. So the problem is not using specific words. Specificity. Let's go check that word. The quality of belonging or relating uniquely to a particular subject. Booyah. Back to the chart. So back to the chart. That's not even a fly. Okay, so what was I going to say? And same thing, right? So if we come trade it, so somebody will say like, oh, we're going to come trade at support, and we're going to buy at support, and we're going to move up. Okay, what the fuck does that mean? You know, like the support lines that are on your chart. Are you talking about a moving average? When you say we're going to test support, are we going to close down there? Are we going to wick down there? Are you going to set your buy at this level? Are you going to set your buy at this level? How are you going to position size? Are you going to put it all in at this level? Are you going to put it all in at this level? Are you going to scale in through this level? Where's your stop loss at? What has to occur to invalidate that? Does volume play a part? Is there, what are the indicators on your chart saying? What are there indicators that could like invalidate that and make you not buy support? So that lack of specificity and just saying very vague things that, again, cannot be disproven. Because here's the thing, right? Using that language also opens them up to be right no matter what happens. So let's say that the let's say the price does something like this, right? Where let's just say like price skyrockets up and like goes up here and then comes back down and closes below, right? And then it just never goes back up. Well, the people that are listening to that, the people that are listening for that analysis from that person will say something like, well, look, man, we didn't close up there. We just pumped up and then we closed back down. And then, we never took advantage of the trade, so your analysis was wrong. Or another way that it could play out is we pump up, come back down, and then we close above on the daily, but we only go like right here, and then we fail, right? That makes sense. So the analyst can just go, well, yeah, man, but we closed the 4 hour above right over here, man. Like, what, were you not paying attention when we closed the 4 hour above that line? That was the trade. I said, if we close above, then we're going, man. Then we're going. And we went and tagged that resistance level. We came back down. And of course, you shouldn't have taken the second trade. That was a false break right after the fact. A lot of people talk like that, man. I would say the majority of people talk like that. And because the majority of people talk like that, I just want to make you guys aware of what to watch for. Because if you hear language like that, you should run in the opposite direction. The language that you should be listening for is, if we close the daily time frame above this chart, if we close the daily time frame above this level, I'm going to exit my position size. If we close back down below on the daily time frame, I will scale back into my position 1/3. If we then close below the open of this candle, I'll scale in another 1/3. I'm going to set a stop loss at 1.5x ATR or on a daily close above this line right here. Either of those situations, I'm going to exit. Also, if Minx does this specific thing, I'm going to exit. If Water Explosion does this, I'm going to exit. If Time Transformation does this specific thing, I'm going to exit. That's falsifiable language. Because if I tell you the metrics, and this is exactly the type of information that I provide to my students in my trade setups and signals and market updates. Metrics, data. Because I don't want to provide vague information and data and then have people come back and say, I was confused, and rightfully so. So it is about time to go, ladies and gentlemen. So as we close out the hour, I will just say one thing. As Bitcoin consolidated, as support, pumped up a little bit. Now, here's what I'm looking for. Let's bring back our lines. Let's bring back our levels. I would currently look at this as an opportunity to add in the vicinity of the daily baseline, of the secondary baseline, and in the tertiary baseline. I am going to be exiting my short position should price cross and close above the tertiary baseline, not the primary baseline on today's chart. The 21 exponential moving average, that's what I want to see. I do view this for the most part as a short squeeze, but objective measures on how to exit the trade. Price crossing and closing above 10,162. I will be out of my short position and still in profit on that trade. But should that happen, that's what I'll do. Also, if Water Explosion, for some reason, gives us a rising explosion level and a green column printing above it, I will also exit. If Time Transformation should cross above the 0 line, I will exit. But right now, holding on to my position. And I do view this as a re-entry opportunity. So we'll see. We'll see what level of resistance that 21 holds up for us right now. And it doesn't even really matter. I'm not really excited to take the long swing. I really need to see a full long signal to be excited about a long swing, because I already talked about the overall bearish market structure. I don't care if we like range around for a little bit and if we pump up here a little bit. I'm going to need to see the legs before I'm like, oh, fuck yeah, this was a bear trap. We are actually breaking into bullish momentum. We're going to have a nice long trade. This is all really good, man. We're going to maybe crack an all-time high or whatever. But either way, it doesn't matter. Price predictions don't matter. What matters is the momentum of the market. You trade in the direction of the market. So one big green candle does not a bullish trend make, and I'm interested in entering into a bullish trend and not at buying at support, at selling resistance at this point in time. That is not my strategy. That is not my edge. I will wait for a good trend. And so the waiting commences. Benoit Parachot, thank you so much for the subscription over there on YouTube, my good friend. Radupara, I entered with an average price of $10,271 on ByBit. Definitely should qualify support, like... Stop it, Philip. Stop it. All right, you guys have been absolutely fantastic. Let's slide over here. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update. I've been your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. I hope you guys are having a fantastic Labor Day. I really hope that you guys took to heart what I talked about today in the form of the importance of keeping a trading journal, how absolutely essential it is to use your position size calculator and to position size consistently and appropriately across time and space so that one individual trade cannot cause you significant loss. Also, so that you feel confident and comfortable execute as a trader, which is absolutely essential. And again, that part about unfalsifiable information. Be very wary of people that talk like that, and also be wary when that language creeps out of your mouth, because it is that non-statistical approach to trading that is the result that so many traders end up losing money by not approaching it in the proper way and by not having that accountability over your own language. So if you guys would like accountability with your own language, and if you guys would like to trade with us and follow along in our footsteps, make sure to head over to premium.crackingcryptocurrency.com. There is a link down in the description below if you guys would like access to the Pathways to Profit course, our proprietary indicators, our tools, our tricks, our tips, as well as our exclusive trade signals and setups. You guys are absolutely fantastic. If you guys want to support the show, make sure to subscribe, follow, share, engage in the comment section where you should leave a comment if you have any questions, opinions, sarcastic remarks, thoughts, questions, opinions, sarcastic remarks, and or death threats. Drop them there. I'll try to get back to you within the next 48 hours. We'll be back here tomorrow at noon. Tell your friends, tell your family, tell people you don't even like. It's important to get this information out. Until next time, guys, trade safely. Make sure to check out the podcast at breakingbitcoin.money. Link in the description down below. Trade safely, guys. Take it easy.